Have you ever heard it said about a person or a business that they're standing on the back of a whale while they're fishing for minnows? In this market of minimal rate spreads and low yields, it's important that we're not doing the same thing, missing solid, high-yielding opportunities within our existing customer base while we're out looking for new customers. I'm Jerry Egan, and in the next few minutes, I'm going to show you how too many banks are fishing for minnows, writing low-yielding credit lines for their commercial customers when those customers demonstrate that they're willing to pay them more. But before I do, I want to be very clear I want to put your mind at rest about one thing above all else. The opportunity I'm going to show you, an opportunity which may well exist in your bank right now, doesn't involve you taking any increased risk. That's right, no increased credit risk to your bank. I'm not going to suggest you take one credit risk you haven't already decided to take, but I am going to show you how to make more money for what you are doing. The fact is, something's not really yielding you more if you have to take risks you don't want to take in order to do it, is it? So let's see what opportunities we may be missing on risks we're already taking. Let's go on an imaginary visit to one of your typical commercial customers. This is probably somebody you have a credit line with. What's that priced at? Prime rate, prime plus a half, plus one? By the time a business needs and is approvable for a significant credit line, they've probably got quite a lot going on. So let's take a look around on our imaginary visit. Over there is a fleet of trucks. They've got them financed with Ford Motor Credit or GMAC, and out there in the plant is some machinery and equipment, and it's financed through CIT or GE Capital, and the whole operation is run on a computer system leased through Dell Finance. Now, do you know what those other three financing sources have in common, besides your customer, of course? What they have in common is your customer is paying them all a bunch more in interest rate than he's paying you. It's true. Not only that, but there's a strong likelihood that you have more at risk in that business than all three of them combined, yet they're all making more than you are. Why is that, do you think? The answer is twofold. First, they asked for it. And second, they had a plan for being there to get it. Do you? Do you have a plan for making sure your bank is there when those decisions are made? Do you ask specifically, repeatedly, and effectively for that higher yielding business? Remember, this is a customer that you've already made a decision to extend credit to. I'm not talking about taking on unknown credits. What I am talking about is you having a plan for selling the higher yielding products your customers already demonstrate a willingness to buy from other people. Products you already have the main ingredients it takes to deliver. It's a pretty safe bet that for every $100,000 or so in credit lines you've already approved and extended to your commercial customers, they've probably got at least $10,000 to $15,000 in higher yielding equipment leases or sales finance contracts with other sources. What if you had that business? What if 10 to 15% of your commercial loan portfolio yielded you 2 or 3% more than it does now? What would that add to your bottom line? And remember, this is credit risk you're already taking and incurs no additional cost. It really will go right to your bottom line. Well, frankly, I don't know if 10 or 15% of your commercial loan portfolio is the right number. It may be less. It may be much higher. The real question is this, though. How much higher yielding business would you need to have for it to be worth having? I can tell you if that kind of business is available in your portfolio, and if it is, I can show you how to get it. There is absolutely no cost or risk to you to find out either. If you want to see if and how you could earn more on the commercial business you're already doing, just reply to the email that contained the link to this video message and let's talk about it. Now, I promised I'd only take 5 minutes, so that's it. However, if you would like to know just a little bit more about how I do know how to do this and why I am qualified and willing to help your bank with it, click the link below this video and I'll tell you that in another short video message. Thanks for watching. Let's rebait those hooks and go catch some whales.